Hey, what's up, everybody? This is Jesus Skywalker, and I wanted to put together a small video where I'm talking you through how I scalp Nosana or other small cap coins. Um, this strategy, um, it works best if you have coins with a lot of volatility. Um, it's not going to be good for coins like Bitcoin or even like Solana, ETH, nothing like it. In fact, I would say you don't want to use an ETH coin period for this. Um, it's just very difficult to scalp when you have to overcome Ethereum's fees. So I generally scalp on Solana coins. Hold on. But you could probably apply these principles to other coins as long as the transaction fees aren't very high. So when you're wanting to scalp without leverage, this is all without leverage. With leverage is a totally different animal. With leverage, you can do coins like, in fact, heavy liquidity coins are better for leverage, like Solana, Bitcoin, and Ethereum. Works much better with leverage because you don't get the drastic moves that you get in small cap coins. So for that reason, I would say that leverage with those coins. Without leverage, it's a little bit harder to to make gains. So what you really need to do is you want to scalp any areas that you can. Now, where I start, I'm on the daily time frame here, and I just wanted to point out a couple things. So what you want to do is establish your environment first, okay? Because like right here, these are daily candles, and right here, these four candles, over these 4 days, price went up 77%. You don't want to be trying to scalp in this range because when you're scalping without leverage, you can only make gains if it's going down. You can, well, I mean, okay, if you're in the coin already, you need to start with a sell. So you need for price to be going down. Now, if you're sitting on cash or USDC, USDT, or whatever, then you can definitely scalp going up. But you need to, I'm talking about mainly in this situation, the trades I'm going to be going over, I was already holding Nosana. So these are some scalps that I made to go down. So first, like I said, you want to establish your environment. So like this chart here, if you're scalping or if you're trying to set up a trade from this point, this is maybe where you want to go into more of a swing trade, or at least go into your short with the intention of occasionally scaling some out and like repositioning. And I'll go over that in a minute. Basically, when you're scalping these coins, you want to scalp A to B. You generally don't want to worry about trying to get this whole move because you'll end up in drawdowns where, like, from right here to right here, that move was 26%. The entire move down from here to here was 38%. So you'd be giving back like, a pretty good chunk of that to ride this retracement. However, when you get to the top of these volatility bands, you want to be able to, these are places where you can try to, hold on to your trade a little bit longer. I'm not really going over swing trades in this particular video, but like I said, if you're in an environment where the daily time frame is kind of topping out, that's going to be a pretty good sign that you can jump in on maybe a longer trade. But for now, we're going to go over to scalps. So once you've identified your environment, now you can move your time frames down what I like to do is I like to look at something like the 1 hour. I'll check like the 4 hour and I'll check the 4 hour and the 1 hour, maybe the 15, 5 and 1 minute time frame. When I'm actually scalping, at that point I'll generally be in the 1 minute time frame, just because this particular coin, Nosana, moves incredibly fast. So, I mean, you could, in the blink of an eye, you could be, on one of these candles that's just shooting up. So I generally will move down to like the 5 or the 1 minute time frame. So I'm going to go through a couple of these trades. This one that I did first, I'm actually going to cover last because I'll explain why in a minute. So once we've identified the area that we want to trade in, Nosana is moving steadily down here. And like I said, you can apply these concepts to any fast moving coin. It doesn't have to be Nosana. But we had a bearish divergence here where I did take a trade. And here on this pink vector candle here, we had a pretty significant drop. So the next day, because on the daily time frame, Nosana had peaked out here and was starting to go back down, and I'm anticipating it to go down a little bit further, like back here when Nosana had this huge drop. It spiked here, but once it bounced up, it came to this point, and this is where I'm assuming Nosana is right now. So I'm just trying to take advantage of this drop just down to here. And that's not a gigantic drop. This entire move is like 23%. But if we cut this into smaller trades, we can do better than that. So going back to the 5 minute time frame. Oh man, why is that so big? I don't know what I was pointing to here. Okay. We're going to start here. When you're looking for your sell point, you want to have a pump. You want to have a pump that's starting to roll over. Okay, so let me make this a little bit bigger because you can appreciate it a little bit better. So right here, over these three candles, and this is, Nosana's been tracking down. So we just had a cross right here of the 50 and 200. That usually will signify a pretty decent change in momentum. So we've been tracking down. You don't really want to, I mean, even though it would have worked out if you would have jumped in here. But when you're jumping into the middle of a move, you never know when it's going to reverse. So I like to wait until I see a spike. Now this spike right here, it's only 1.6%, but it's pretty obvious when you're watching the price move down that when you get this spike like this, that you'll be able to use this as an entry point once it rolls over. So on your TDI plus RSI, you can see that on this 5 minute candle that Nosana came out of its volatility band right here. The little blue lines here, this is the volatility band. Once price breaks out of this, once you break out of the volatility band either way, you're looking for some sort of reversal. So if it comes out of the bottom of the volatility band, you're looking for a reversal to the upside. And if it comes out of the top, you're looking for a reversal to the downside. So ideally what you want to look for is for price to come out and then snap back into the volatility band and jump over this or go through this red line going down. Okay. Key points of interest are when it's going to cross this red line and when it's going to cross this orange line right here. That's like your midpoint. It's usually going to be a point where things are going to pick up. Okay, so as price has been falling here, I'm just looking for a spike. Could have had one right here. This happened at 5:45 in the morning. I wasn't awake. If this kind of spike right here, I jump on that all day. Okay, but instead we get this little rundown here, and we get our spike. So now I'm looking for an entry. Comes right here, and I jump in here, and price starts rolling, and it's aggressively rolling. Now I decided to add something on here just because I felt like this trade was going to go pretty well. And I've already got like a little bit of a margin for error here. So if price, if I jump in here and price shifts away, I got a little bit of room till my waterline to where I could just get out even or with a small loss. And I'm okay with that. You have to be okay with the possibility of taking losses. So this blue line here represents the average of these two spots once I jumped in. Price rides down, rides down, rides down. And at this point here, price leveled off. And on this candle right here, price seemed as if it was going to go back out. This would have been an okay spot to close. I did hold it for a little bit longer, and and as soon as this started curling up, this vector right here and this vector right here made me think that it was like that price might reverse. You got this long wick to the downside, so price came down here and then was pulled back up. That's a key signature that your momentum might be slowing. Right here when it got to this vector, I felt like maybe closing any moment now. And right on this vector I closed, but we didn't get the best fill. And this blue line here is where we exited the trade. And all in all, this trade made $14%. That's not. Wait, I'm sorry. Wait, was that? I think I looked at the wrong thing. Excuse me. 7.5%. Okay, so not a huge pickup, but I mean 7.5%, and this is fairly easy. It's just A to B, and close it down. Okay, the next trade that I did. This trade went overnight, but I had done a couple trades before. I had done some trades to where I had a little bit of wiggle room as far as like, I'm in decent profit overall. So if I lose a little bit on a trade, then I'm okay with it. I was not near my computer when this moment happened. I would have preferred to enter here, but I wasn't here. So price comes down, and when it came up here to the 50 EMA on the 5-minute time frame, it had this little drop here, and then it kind of flattened out, and I felt like it was going to continue down. So I entered here, and I was getting ready to go to bed, and price came up, but I wasn't super worried about it. I had only used a very small size here. Anytime you're going to trade, but you're not going to be right at the computer, or right at your phone, whatever you're trading off of, just keep your size small. Don't put your whole stack on this, because if it goes against you, you're going to be very sorry. So anyway, while I was sleeping, price did come up, but by morning, price had come back down, and I was already in profit by the time I woke up. Price dropped down again, and it was looking like it was going to continue. So I added on right here, and my average between the two ended up being this orange line right here. I followed this down until the momentum started wearing off, and right here you have all these drops, and then it levels off and you get this first bump up, and I'm already thinking that, you know, I'm probably going to be closing this as soon as this vector started. And I mean, like really, like right as soon as this started, I went ahead and closed and actually got a pretty good fill, which was this orange line here. That was my exit. So this trade, only gave like 2%, but because I had the two buys, it was a little bit heavier, so did decent off of this. Okay, then, but the key, the important thing to say here is that I went from here to here, but like when it got down here, I got out right on time. So that's what you want to do. You just want to go A to B. Although, because I was sleeping, I normally wouldn't be in this trade right here. I'll say that. In fact, I don't like that I entered this trade here, to be honest. This one was fine. This would have been better. But this is, you know, this was kind of like when I woke up and I decided to add on. But as soon as I saw this right here, I just go ahead and bail out. So now that I'm getting these vectors, what am I looking for? I'm looking for the spike again. Also, when you're in a downtrend like this and you're spiking towards a moving average, that's your area of interest. Price is usually going to turn at or near moving averages. So this this green candle here, when it shoots up, it gives like a bit of a tail, and then look, no continuation at all, none. Okay, so we enter the trade here, and I, you know, like sometimes the chart that you're looking at, there might be a little bit of you know, there might be a little bit of a difference between the market maker here and the market maker you're trading with, because on this particular buy, even though I bought down here, my fill ended up being here. Now, when I put the lines on the chart, I always try to like actually get what the average was off of the fill, because you don't want to, like, how do I say it? You don't want to just mark on the chart where you bought it from, because then, like, with between fees and between the room between the, you know, your little spread, you might be off quite a bit. So on this one, I got a really good spread. Now, like, when you fill your trade, take the amount of money that you put into the trade and divide it by the what do you call it? Put the amount of cash you put, the amount of, like, on this, I'm selling Nosana for USDC. So I take the USDC, divide it by the Nosana, and that gives me my average, which ended up being right here. And like I said, right here at the 50-day moving average, we got a great reaction. Price falls. And also, I will say this: when you get to points where it's kind of obvious that you're probably getting it right, this one I went a bit heavier than I did on the other trades because I felt a little bit more confident about this. But also, because I went heavier on this, I would not be hesitant to close this if it was moving against me. Now, price aggressively moves down, and I think I added on to this trade here, but I forgot to put the arrow. So I added on right here. Oh, wait a minute. No, this is... this is this trade. I just have the lines colored wrong. Okay, so I might not have put the. Oh wait. There was another spot where I. Okay. This white line was the fill for here. Okay, I tried to color code the trades so that I wouldn't lose track. So from here, I get in. Now down here, I had this flattening out part, and this got me a little bit because you had this little spike up, and I'm point A to point B. A lot of times when I'm doing these kind of trades, I'm not just focusing on the trade. This is stuff I'm doing when I'm working. So when I look and I see this flatten out, and on the 1 minute time frame, you'll see it a little bit more obvious. Like there was a green vector here. So when I got this green vector, I was like, oh man, this is a pretty good trade so far, and I want to go ahead and just close it. So I left some room on the table here, and that's no big deal. That's going to happen, but I made money, and that's all that matters. So this trade here made about 9%. So pretty solid. I mean, like 3 very small scalps that were not hard to do, and got a decent little return out of those 3 trades. Now, the trade that I wanted to go back to that I started with, this is a trade that did not go well, but I, remained calm and just worked my way out of the trade. And this is how you could work your way out of the trade using the 20-20-20-40 principle. And I'm going to explain that. When you enter a trade and it starts working against you, if you want to add on to your you start with 20%. 20, like whatever your working I'm not talking about 20% of your whole bag either. What I'm saying is, if you pick an amount that you're going to work with, all right, you pick an amount that you're going to work with, and you divide that into 20%, 20%, 20%, and 40%. So you have 4 pieces, and when you make your entry, if price goes against you, when you get to the next spot where you feel like that might be a turning point, then you can add another 20% there. Then you can do the same thing at the next point, and now you would have 60% of your working capital in. And if price continues to move up move against you, that last 40% is your last buy-in, but it must immediately see a profit. If price moves at all against this 40%, you got to bail out and take a loss. Okay, so when it comes down to this point here, and price moves against you, you need to look at maybe some other time frames and figure, am I just wrong, or am I just early? And for this trade, let me open up the TDI so you can see what I'm talking about. Like for this trade here, I'm up pretty high, and I break the volatility band, so I'm figuring I'm pretty good here. And we entered. We got caught right here, because this spot right here, that's what I'm looking for. And I got it, but then this tracked sideways, which allowed price to go up. Now, right here, right here, I probably got faked. That might have been something on the 1 minute. Let me pull that up and see. Where is the price? We're going back over here. Okay, so right here when price started breaking down, I felt like this was going to be a good spot to put the next 20%. So I put it in here. My fill ended up being down here. And by the way, I got kind of a shitty fill on both of these. Like, so I got 20% here, 20% here. Then when it comes up here, I actually get a fill that's so good that none of these lines ever touched it. I guess on the other market maker, it was a little bit, it showed price a little bit higher. But anyway, I got these 3 fills, and my average between the two ended up being this line right here. So after I add these 3, now I have to wait for price to go down. It has to get below this before I'm going to be in profit. So anyway, you know, when it gets up here, you're at a, you know, this was not like a huge loss because, like I said, I'm keeping this pretty light. But it's, you know, it's a decent little, you know, it's a decent little loss. I mean, from right here to right here, that's a, well, I mean, it looks like it's not that much, but it's a 2%. Well, let me see. Let me go down. I'm sure it's a little bigger than that. Yeah, that's, well, I mean, I guess it's just 2%. But anyway, you're in a loss on these 3 spots, so it has to work down to your spot. Now, once you get into profit, my suggestion is immediately take off one of these 20%. Okay? Even though you've got now, and I'm telling you, you're going to be tempted. You have all 3 of these buy-ins in, and you move into profit, and you're like, finally, let's go. Let's just let it run. But you have 60% of your working capital in here. And if you have the 40% up here, you have 100% of your working capital in here. So as soon as that trade gets into profitability, if the 40% is in, you absolutely have to take that off as soon as you get into profitability. But if you're not on the 20%, I would still pick one of these up, because if price moves against you again before you exit the trade, you can just, you know, add that 20% back on, and you've reduced your risk. You've reduced your risk, and you've gave yourself flexibility to be able to fix your position again. Like, you know, my position was way down here. Like, this is where my position was. But after these buy-ins, I brought it all the way up to here. Okay, so once I got here into profitability, price kind of died out, and at this point, I'm just like, you know what, this trade's not going to work out, so I'm just going to get out for a very, very, very tiny gain. But you know, this could have been a pretty decent loss. This is just how you want to add on in order to work out your trade so that you can either break even or, you know, maybe make a small gain. But I'm telling you, I don't think you'd want to let this run. Now, if I had let it run, it would have been fine. Everything would have worked out great. But you're going to sit down and, like, if you let trades like run constantly, like if you don't trade A to B, like if you were trading here to here, you're doing fine. But if you don't sell here, when this starts going back, it could easily just keep going. This shit could go to the moon for here, for all you know. And you had a winner that you turned into a loser. So, lesson here is just take your wins. Tino from Traders Reality, I was talking to him once, and you know, back then I was very new to trading, and I always wanted the trade that started here and ended here. I always wanted, like, you know, that long trade so I could see those huge returns. And Tino, like, is not much of a swing trader. He's like almost purely a scalper. And he said And it, you know, it didn't dawn on me at the time when he said it. At the time when he said it, I didn't get it. But he said, I don't want to make this one trade when I could make like 50 trades on this entire move. Now, this is, like I said, this is a very short duration of time. So, like, this isn't like the best example. But if we went to, like, you know, if we go to the like 4-hour time frame here, so like this whole move right here could have been one trade, and that's fine. You will make a hell of a return on that trade. But if you go here to here, or like if you go here to here and then 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 here to here, like you're constantly trading over the same spots you've already been. Like, you're making money on the same, like, from here, this is 305 down to 253. And in this price range, you've made trade. You know, like, this is all through the same spot versus this where it's like you're going down here, and granted, your end result is going to be a bigger one trade. But if you add up all these little trades together, it's going to be better than this. And it's going to be a lot safer because you could trade you could enter here and trade all the way down to here and plan on going here, getting this retrace and following it all the way down. But if you, and on this situation, it would have worked. But you just have no idea how many times what actually happens is it goes here to here. And now you've turned a winner into a loser just because you're greedy. Just because you didn't want to take your win right here, you lost right here. So anyway, this, like I said, this strategy can be used on pretty much any coin that has high volatility. That's one of the reasons I love Nosana. Nosana's volatility is insane. Okay, like these moves, like these moves here, that right there, that's a 62% move. All right, and going down, like this was a 36% move going down. Okay, so you get in here, grab your whatever 38% or whatever, and then ride it up to here. That's a 47% gain. Yeah, this coin is so good as far as for trading. This coin is ideal for flipping. Okay, any coin that gives you such a harsh move, and I'm telling you, like, no, it's not very hard. This coin is very similar to Jasmine as far as that, like, when it's moving, it's moving. Like, you look in here, these are all these green vectors. All these green vectors in here. And then all the way up here, you barely had any kind of inkling that anything was wrong. And then the second you got this red vector here, this green vector followed by this immediate red vector, this was a good sign that you were going to tip over. And then right here, you have the cross of the 5 and 13 EMA, but this is on the 1 hour time frame. Excellent exit point. So coins like this that move up and then down harshly, this will work great for you on that. And like I said, you know, these trades that I did, you know, they weren't for like huge amounts of money. This is just for like scalping practice and to slowly add to a bag. And slowly add to it in, you know, a fairly safe way. So anyway, that's going to end this video. I hope it helped you guys a lot. Take care.